Say, do you know what this is? It's a Kodak 35mm color slide.
Give Kodak gifts for Christmas. Take pictures, save the fun, and share your Merry Christmas days with everyone.
In 1996, Kodak generated 16 billion US dollars in annual revenue and held a market valuation of 30 billion US dollars. The company had accumulated 79,000 patents over 140 years. Kodak's first transparent film enabled Thomas Edison to develop the first motion picture camera in 1889. Kodak was such a phenomenon that in 1966, their camera technology was used to capture the very first photograph of planet Earth taken from the space. At its highest, the company's stock was trading near $100 per share, but today it trades near just $1. So what went wrong? This is the rise and fall story of Kodak. For most of the 20th century, one company owned every moment that was worth capturing. And that company was Kodak, which was founded in 1892 by George Eastman and Henry A. Strong. For decades, the company which manufactured cameras and film became synonymous with the idea of memory itself through their campaign, the Kodak Moment. It was an idea built around preserving the unforgettable moment of your life, your child's first step, your wedding day, or it could be the last photo of your grandma. The story of Kodak, however, began much earlier in 1878, when Eastman, a young bank clerk, was preparing for his vacation and discovered photography at the time required huge equipment, dark rooms, chemicals, and technical skills that an ordinary man didn't have at the time. So for years, he experimented at his mother's kitchen table, driven by one simple idea, that photography should be easier, cheaper, and accessible to anyone. In 1888, that idea became real when Eastman introduced the first Kodak camera, which was preloaded with roll film. He claimed it was so simple that anyone could use it without instruction and launched it with his slogan, "You press the button, we do the rest." After taking pictures, customers could mail the camera back with $10 for processing and receiving their prints, negatives, and a newly loaded camera in return. This immediately changed the game. That $10, by the way, roughly is $340 in today's money. By 1900s, Kodak pushed accessibility even further by launching the Brownie camera, which was priced at just $1. Kodak sold over 150,000 Brownie units in the first year and more than 10 million within 5 years, turning photography into a daily habit for a common man. Over the following decades, Kodak's influence expanded dramatically. By 1976, the company accounted for about 90% of film sales and 85% of cameras sold in the United States. At its peak, in 1996, Kodak generated 16 billion US dollars in annual revenue and carried a market value of near $30 billion. But here's the catch. The real money maker was never the camera. It was the film. The company had perfected a strategy similar to coffee machine and pods model or the printer and the ink cartridge model. They sold cameras at a low price but maintained extremely high profit margins of about 70% on film, paper, and processing. This business model was so profitable that one executive once said it was so difficult to find anything legal or lucrative as selling photographic film. For a century, this model seemed unbeatable. But then, inside Kodak's own laboratory in 1975, an engineer named Steve Sasson built the world's first digital camera. His first model was slow and crude by modern standards, but he believed that photography might one day exist without film at all. Top-level executives saw this not as a revolutionary idea, but as a direct threat to their profitable film business, so they shelved it. But even then, internal researchers from within Kodak itself predicted that consumers might switch to digital imaging by 2010, which, by the way, is remarkably true. You can understand why it was so hard for Kodak to disrupt its own success, because sacrificing high-profit film for a low-margin digital world didn't make sense at the time. And so the company hesitated, hoping that rolls of film would remain relevant for much longer. Kodak also made some costly diversification, including a $5.1 billion acquisition of a pharmaceutical company called Sterling Drug in 1988. Kodak's logic was straightforward. They thought chemicals are chemicals. And they believed that expertise would transfer and pharmaceutical margins were attractive at the time. But Sterling failed to competition and their profit margins started declining due to not innovating soon enough. By the way, they manufactured aspirin at the time. Also, you will notice later in the story that Kodak also did something similar and which caused them to lose so much profit on the table. So Kodak eventually sold Sterling for roughly half the purchase price, which was a massive loss. In 1989, Kodak still had a chance to course correct. The board of directors was selecting a new CEO and they had two candidates, Phil Samper, who was a digital photography enthusiast who understood where the world was heading, and Kay Whitmore, who represented the traditional film-first mentality. Quick one, want to stay ahead of business, tech, and world news? Our newsletter is data-driven, fact-packed, and won't flood your inbox. So check it out. Now back to the video. The board chose Whitmore, who confirmed that he would keep Kodak closer to its core business in film and photographic chemicals. Many analysts consider this the last nail in the coffin. After that, Kodak's decline became increasingly inevitable. By the end of 2000, the consequences became visible. Film sales began declining steadily, and between 2003 and 2011, Kodak eliminated roughly 47,000 jobs and closed numerous factories, and watched market leadership shift to companies like Canon, Nikon, and Sony. A company that reported $2.5 billion in profit in 1999 posted $222 million in losses in 2011 and was subsequently removed from S&P 500. Meanwhile, competitors like Sony and Fujifilm had been investing aggressively in digital technology, while Kodak continued to defend film, believing consumers would always want to have physical photographs. When Kodak finally entered the digital camera market in the late 1990s, they briefly captured about 27% of market share. And again, they repeated the history. Digital cameras were often sold at losses of around $60 under the assumption that profits would return through printing on paper, but that idea never took off. At this point, Kodak partially understood this shift and acquired a photo sharing site called Ophoto in 2001. But instead of building it into a social platform, they used it merely to encourage people to print photos. They were just so fixated on film and printing. So they eventually sold it for less than 25 million. That same year, Facebook acquired Instagram for $1 billion. You can see how they lost another big opportunity here. In January 2012, Kodak filed for Chapter 11 bankruptcy. The company was 131 years old at the time and listed $5 billion in asset against over $6.75 billion in debt, and had shrunk from 64,000 employees to just 17,000. To raise cash, they sold patents, ceased production of multiple product lines, and finally they emerged out of bankruptcy on September 3rd, 2013. Then they refocused as a technology company, serving business imaging with no direct-to-consumer services or products. So even though you may not see Kodak cameras in Best Buy, the company is still alive. In 2016, Kodak reported its first annual profit since bankruptcy, with much of its revenue coming from brand licensing. In August 2025, the company issued a statement confirming that they have no plans to shut down their company or file for another bankruptcy. If you look at their great competitors of the era, which was Fujifilm by the way, that also faced the exact same timeline, the same disruptions, and the same threats. But Fujifilm knew what was coming, so they diversified early, investing in new technologies beyond photographic film while it was still profitable. Today, Fujifilm is worth around $30 billion. So yes, Kodak will be remembered for nostalgia and the joy it brought to photography, but its overconfidence in its core business and the reluctance to change will remain a lesson for every entrepreneur. So the moral of the story is simple. If you don't disrupt yourself, someone else will, and they will win the market.